What if I told you there's a stock on the market right now that just locked in nearly $3 billion in artificial intelligence cloud contracts, and yet, on that very same day, a small army of Wall Street's sharpest traders were doubling down on their bets that this company is going to fall apart? It sounds impossible. How can a company be signing blockbuster deals worth billions while 22% of its entire tradable float is sold short, sitting there like a loaded spring, waiting for a reason to explode? Welcome to the single most contested battleground stock in the market today, IREN. This is a company caught in a violent tug of war between explosive AI-fueled hope and the cold, hard reality of billions in debt. And by the time we're done here, you'll understand exactly why this stock could either be the next great short squeeze rocket ship or a cautionary tale of dilution and broken promises. We're going to break down the numbers, the catalysts, the exact price targets, and the one date circled on every trader's calendar. Now, before we dive into the deep end here, if you find yourself getting value out of this breakdown, do me one quick favor and tap that like button and subscribe. It genuinely helps the channel grow and keeps this kind of deep dive analysis coming your way. All right, let's get into it. To understand why this stock is ripping investor portfolios apart, we have to start with the massive numbers that management just put on the board. And trust me, these numbers are the reason for all the excitement. IREN is awkwardly caught mid-pivot. This company started its life as a legacy Bitcoin miner, grinding away at crypto, but now it's aggressively trying to reinvent itself as a Tier 1 AI cloud infrastructure provider. And on the surface, the top-line ambition here is nothing short of staggering. Management is projecting a massive $4 billion in annualized run rate revenue for 2026. That figure is being fueled by $2.8 billion in signed multi-year cloud contracts. Think about that for a second. A former crypto miner is now telling the world it's about to pull in $4 billion a year serving the AI revolution. But here's the thing that separates the winners from the losers in this game. While these growth numbers look absolutely incredible on paper, there's a massive execution reality lurking underneath, involving billions of dollars in debt that completely changes everything. And we're going to expose exactly what that is in just a moment. Because of this extreme tug-of-war between soaring hope and crushing debt, the stock chart itself looks like an absolute roller coaster. So let's trace the wild ride this thing has been on earlier this year. At the absolute peak of AI euphoria, IREN rocketed all the way up to a 52-week high of $76.87. Investors were euphoric. But then, as reality started to creep back in, the stock suffered a brutal, gut-wrenching sector washout, plummeting all the way down into the low 30s. It looked like the party was over. And then out of nowhere, bam, management drops that $2.8 billion contract announcement, and the stock immediately spikes 20%, blasting up to $40. Since then, it's given some of those gains back, settling in around $37.07. But here's what that wild price action really tells us. This extreme high beta volatility reveals a market that frankly has absolutely no idea how to price this company right now. And when the market is this confused, that's exactly when the biggest opportunities and the biggest risks are born. Now that confusion is about to violently collide with a very strict, highly consequential timeline. Because IREN isn't drifting aimlessly, it's heading straight toward a wall of catalysts. Over the next few months, IREN faces an absolute gauntlet. On the macro side of things, we've got late July and August big tech earnings rolling in from giants like Microsoft, Meta, and Amazon. These reports are going to dictate the entire AI spending narrative for the whole sector. If they signal they're pouring money into AI, IREN benefits. If they pull back, watch out. Then, on the micro side, IREN has its own specific hardware milestones to hit, like securing critical Dell financing and deploying a staggering 50,000 NVIDIA GPUs. Here's the one you need to burn into your memory. Circle August 27th on your calendar. Mark it, highlight it, set an alarm. That is the date of their fourth quarter earnings, and it carries an extremely high probability of a major violent price impact. This is the moment of truth. So why exactly is August 27th so critical? It all comes down to one simple question. Does the pivot narrative actually match the cash reality? Because those are two very different things. Management is out there screaming from the rooftops that 85% of their revised $4 billion revenue target is already locked in under contract. And on the surface, that sounds phenomenal, right? But here's the catch that so many retail investors are missing. That metric is a forward projection. It's a best-case scenario dream. It assumes that every single GPU is plugged in at year-end and then runs absolutely perfectly for all 8,760 hours in a year. That is not the same thing as recognized real JAPE revenue that shows up in a bank account. and the market has finally caught on. Investors don't want beautiful projections anymore. They want cold, hard proof. They want to see that these multi-year contracts actually translate into real cash flow, and that IREN can avoid a humiliating repeat of last quarter's revenue miss. That's the entire ballgame. And this massive gap between projected revenue and actual cash is splitting Wall Street right down the middle. It's not just a small disagreement. It's a full-blown civil war among the biggest investors on the planet. Institutional conviction on this stock is deeply, painfully fractured. Right now, the so-called smart money holds about 41% of the stock, but they are completely and utterly divided on where it goes next. In the first quarter, you had major players like Defiance ETFs and BlackRock accumulating shares heavily, adding millions upon millions of shares, essentially buying the entire AI pivot story hook, line, and sinker. They're all in. But on that exact same token, heavyweights like Morgan Stanley, Jane Street, and BNP Paribas were doing the complete opposite. They were heavily slashing their holdings, bailing out, running for the exits because they simply don't buy the execution risk. So you have to ask yourself, who's right? The billion-dollar funds buying in or the billion-dollar funds selling out? They can't both win. And if you think the institutions look confused, just wait until you see what the options traders are doing behind the scenes, because this is where it gets truly wild. Historically, the options market for IREN has been overwhelmingly, brutally bearish. We're talking about a 50-day put-to-call ratio of 5.88. To put that in perspective, that reading is higher than 98% of all annual readings. Traders were betting against this thing with everything they had. But the very minute that $2.8 billion contract news hit the wire, the entire script flipped intraday. Suddenly, over 53,000 call options exchanged hands. That's triple the average volume, and it was heavily concentrated on the weekly $50 strike price. Let that sink in. Traders piling into bets that this stock hits $50. The options market is now pricing in absolutely explosive volatility. It has become a tightly coiled spring, wound up and ready, just waiting for one single spark of fundamental validation to send it flying. But a coiled spring needs an ignition source. It needs something to light the fuse. And IREN happens to have one of the most powerful ignition sources you can find in the entire market. Right now, short interest in IREN has spiked a jaw-dropping 37%, reaching a whopping 76 million shares sold short. That represents 22% of the entire available float. Nearly a quarter of every tradable share is currently being bet against. Now, here's the mechanical magic of this setup. Based on the average daily trading volume, it would take those short sellers about 2 full days of continuous buying just to cover and close out their positions. 2 full days. That creates immense structural tension in the stock. It makes IREN a prime textbook candidate for a violent face-ripping short squeeze if, and this is the big if, they manage to report a solid revenue conversion beat on August 27th. All that pressure could unwind in a heartbeat. But before we all get too excited and start dreaming about the moon, we need to be smart. We need to dig deeper into the actual numbers management is feeding us. Because there's a darker side to this story. There is a massive, glaring divergence between the narrative and the reality here. Management absolutely loves waving around that annualized run rate metric because it paints an absolutely perfect, flawless picture of the future. But the actual execution data tells a very, very different story. See, building data centers isn't a clean spreadsheet exercise. It's a brutal, cash-burning, grinding reality. That perfect $4 billion assumption conveniently ignores enormous cooling costs, relentless hardware depreciation, and the sheer friction and difficulty of actually turning all these machines on and keeping them running. The dream and the day-to-day grind are worlds apart. And when we zoom in and look closely at that $4 billion target, a truly terrifying geographical risk suddenly appears out of the shadows. This is something almost nobody is talking about. Of their $4.4 billion total revenue target, only $2.6 billion is actually a signed, sealed pipeline. That leaves a full $1.8 billion resting entirely on internal estimates and planned future deployments. In other words, nearly $2 billion of this dream is just a hope. And where exactly are all these critical deployments supposed to happen? Texas. This entire massive tranche of revenue relies on flawless grid interconnection in the state of Texas, a state that is right now absolutely notorious for its delays. So think about the risk here. If those grid interconnections stall out even for a few months, then none of that projected revenue actually materializes in 2026. Poof, gone. It's a house built on a foundation that hasn't even been poured yet, which brings us to the single most dangerous, most hidden metric in this entire story. This is the real reason so many of those sophisticated institutions are shorting the stock. And once you see it, you can't unsee it. This, my friends, is the dilution trap. To fund these massive, sprawling AI dreams, IREN has raised over $2,600,000,000 through convertible notes. On top of that, they granted a mind-boggling 18 million restricted stock units to their co-CEOs, and they're spending billions more on hardware capital expenditures. Now here's the trap. Retail investors are enthusiastically buying into the gigawatt top-line growth story. It sounds amazing. But if you issue a mountain of new equity at $40 a share to projects whose profit margins are going to get squeezed hard by 2027, something ugly happens. The company's overall enterprise value might go up, sure, but the value of each individual share, your share, gets absolutely crushed under the weight of all that new stock. It's a silent killer. So after all of this, the burning question remains, what is IREN actually worth? Let's stop with the theory and map out the two exact scenarios for where this price could go next. This is where it all pays off. Let's start with the dream. In the best case bullish scenario, everything lines up perfectly. The macro base holds strong. The Fed keeps interest rates steady, and big tech comes out and confirms they're actually increasing their AI capital expenditures, not cutting them. Then the micro catalyst hits on August 27th, with IREN triumphantly proving that customer prepayments, covering a healthy 45% of their GPU capex, are actually flowing in. When that happens, that 22% short interest gets completely and utterly trapped. This triggers a rapid, explosive short squeeze that blasts right through the key technical resistance level at $48, sending the stock absolutely soaring back toward the analyst median price target of $79 to $80 a share. That would be a life-changing move for anyone positioned correctly. But we have to be honest and stare directly at the downside too. Because if the execution falls flat on its face, the floor could drop out entirely. In the worst case, bearish scenario, we get hit with a brutal macro drag. Imagine Meta or Alphabet steps up and signals that they're actually overbuilt on AI infrastructure, and they plan to start reselling their excess compute capacity. That single announcement would spark a savage sell-off across the entire sector. Then, to make matters worse, IREN misses its August earnings due to those pesky hardware commissioning delays we talked about. Suddenly, the market snaps to attention, and prices in the massive, crushing weight of all those convertible notes and RSUs, causing a severe dilution drag. At that point, the stock enters a genuine freefall, breaking straight through support down to the lower Bollinger Band at $34.03 and risking a total washout that could drag it all the way back down into the 20s. It's a long way down. So, with both of those wildly different futures on the table, the natural question becomes, how on earth should you position yourself in the immediate short term? What's the play right now? For the next week or two, you absolutely need to understand one crucial thing. Right now, IREN is completely and totally a passenger. It's not driving its own bus. It's going to trade almost entirely on macro tech sentiment and not on its own fundamentals. So here's what to watch. If Microsoft, Meta, or Amazon issue bullish AI guidance in their reports, IREN is going to catch a strong sympathy bid and will likely test that resistance band up around $42 to $44. But on the flip side, if big tech signals caution and starts curbing their capex spending, then you should expect a fast, ugly slide right back down to the $33 to $35 range. Until August 27th, IREN's fate rests in the hands of others. So let's bring this entire story together, because investing in IREN really does come down to one single ultimate calculation. This is the equation you have to solve for yourself. This is the ultimate balancing act. On the capability side of the scale, IREN has some serious weight. They've successfully proven they can pivot from crypto over to AI. They've got the secured multi-year cloud contracts in hand, and they possess the unparalleled grid-connected land needed to actually scale this whole operation up. That's a genuinely powerful hand to play. But on the cost side of the scale, the weight is just as heavy. They're fighting relentless execution friction, those dangerous Texas grid delays, and the very real, ever-present threat of diluting their shareholders into oblivion. The blueprint for greatness is absolutely there on the table. But at the end of the day, shareholder value hinges entirely on management's ability to execute this transition without destroying the cap table in the process. And that's why for everyone watching this space, all eyes are on August 27th. Now, before we wrap this up, I've got to give you the important stuff. Everything I've shared with you in this video today is for informational and educational purposes only. It is absolutely not financial advice. I am not a licensed financial advisor, and nothing here should be taken as a recommendation to buy or sell any security. Every single investment carries risk, and a stock as volatile as IREN carries a whole lot of it. So please, Always do your own thorough research and consider speaking with a qualified financial professional before you make any investment decisions with your hard-earned money. All right, with that out of the way, let's land this plane. IREN is a genuine high-stakes battleground, a stock torn between billions in AI promise and billions in looming debt, with a short squeeze fuse just waiting to be lit on August 27th. If you had to make the call right now, do you think IREN's management pulls off this pivot and triggers an epic short squeeze? Or does the dilution trap and Texas grid risk drag it back down into the 20s? Drop your prediction in the comments below. I read every single one, and I genuinely love seeing where you all stand. And if this deep dive helped you understand the full picture, please do smash that like button and hit subscribe so you don't miss the next breakdown. I'll see you in the next one.